The crypto market, once the playground of dreamers and risk-takers, is again in the spotlight. Bitcoin's volatility has returned, altcoins are struggling to find direction, and investors are asking one question: what now? In today's video, we'll break down the current state of the crypto market, what's driving prices, what major players are doing, and most importantly, what you, as an investor, should do next. Stick around till the end, because I'll share a step-by-step strategy to survive and even thrive in this uncertain phase of crypto. The current crypto landscape. Let's start by looking at where we stand today. After a volatile summer, Bitcoin is hovering around key support levels, struggling to break higher as macro uncertainty lingers. Ethereum remains the backbone of decentralized finance, but faces pressure from faster, cheaper blockchains like Solana and Avalanche. Meanwhile, institutional interest, once the big hope of crypto bulls, has cooled slightly as traditional finance watches the Fed's next move. But here's the interesting part. Despite market fatigue, on-chain activity is growing. Developers are still building. Layer 2 scaling solutions are expanding. Real-world asset tokenization is gaining traction. That's a signal, not of hype, but of foundation building. Smart investors know the best opportunities often emerge in silence, not in headlines. Macro factors impacting crypto. Let's talk about the big picture, the macro economy, because crypto doesn't exist in isolation anymore. 1. The Federal Reserve and interest rates. Fed Chair. Jerome Powell's recent comments have reinforced expectations of a potential rate cut in October, but the market remains cautious. Lower interest rates generally mean more liquidity, which is good for risk assets like crypto. But if inflation flares up again, that optimism fades quickly. 2. Geopolitical tensions. Trade tensions between the U.S. and China, ongoing conflicts, and the oil price volatility all add uncertainty. In such times, investors tend to reduce exposure to speculative assets. 3. The Dollar Strength Index, DXY. When the dollar strengthens, crypto often weakens. And right now, DXY is near recent highs, so macro headwinds are real. But remember, the market often moves ahead of news. When everyone's fearful, that's when accumulation quietly begins. Market sentiment and data. Let's decode what the data says. The Crypto Fear and Greed Index is hovering around fear, meaning investors are cautious but not panicked. Exchange inflows have slowed, suggesting fewer people are selling. Whale wallets, large holders, are showing accumulation behavior. This pattern is familiar. It's the quiet accumulation phase that often precedes the next major rally. But, and this is crucial, timing it perfectly is almost impossible. So instead of predicting when the next bull run starts, focus on positioning, building exposure smartly, gradually, and with risk control. What investors should do now. Let's get practical. What should investors actually do in this environment? 1. Stay diversified. Don't go all in on any single coin, not even Bitcoin. A healthy portfolio in 2025 should mix blue-chip cryptos like BTC and ETH, emerging layer 1s with strong ecosystems, and maybe a small allocation to AI or DeFi tokens with real use cases. 2. Adopt a dollar-cost averaging DCA strategy. Instead of trying to buy the dip, buy consistently. Whether it's weekly or monthly, DCA smooths out volatility and reduces emotional trading. 3. Prioritize security. With scams, exchange hacks, and rug pulls still rampant, self-custody is your best friend. Use hardware wallets or reputable cold storage. Remember, not your keys, not your coins. 4. Focus on fundamentals, not hype. Avoid chasing meme coins or speculative trends. Look at developer activity, ecosystem growth, and partnerships. Because when the market turns bullish again, those with real fundamentals lead first. 5. Keep learning. Crypto isn't static. It evolves fast. Understand new concepts like real-world asset tokenization, decentralized AI, and cross-chain interoperability. Those who understand the narrative early capture the upside. The long-term outlook. Looking ahead, the 2025 Bitcoin halving is on the horizon. Historically, halving cycles have sparked strong bull markets within 12 to 18 months. Add to that rising institutional adoption, growing regulatory clarity, and mainstream integration through ETFs, and you've got the recipe for long-term growth. But the real winners? They're not the ones who chase headlines. They're the ones who stay consistent, manage risk, and think long-term. So, where does that leave us? The crypto market today is a blend of uncertainty and opportunity. Volatility will test your patience, but discipline will define your success. If you've learned something valuable today, hit that like button, share this video with a fellow investor, and subscribe for more deep dives into the financial forces shaping our world. Remember, markets move in cycles, but wealth is built by those who stay through every season.